Good morning to everyone. This is the NFP Thursday, which is very weird in and of itself. This is Eurotrade on TopstepTV. My name is Mark Stalker D, better known as Deeyana Angelo as well. I've been trading for 18 years. 13 years out of that, I've been a prop trader. I specialize more in commodities, and you will see me trade copper, platinum, maybe crude oil and RBOB, and natural gas as well. All right, let me just check because I had to get a new monitor, so I'm just checking to see whether that's framed correctly in my OBS. Let's have a look. All right, so I'm going to have to adjust that at some point because I don't think my entire screen is in. Let's do full screen like that. Also got a tiny little upgrade on the lens because I didn't think that the other one was cropping in, so we're working with a G Master now, which is probably one of the better cameras that you can get. All right, now I do have a short. So let's talk this through, and then we're going to be looking at who's in the chat and how you guys are doing, right? Okay, so yesterday we had a pretty big upside on copper, driven by some very good China numbers, and right now we're sitting a little bit too high up for any kind of good further movement to be happening. So what I want to see is that this 520 gets defended during the London session, and then maybe, just maybe, we could have a mean reversion somewhere closer to the London value high. If that doesn't happen, we can then expect further upside towards the ADR high, which is located at 526.40. So, you know, both sides of the story are possible, but if you look at every previous day where we had a pretty big run up, at least for a part of the day you will get a pretty nice sell-off, and then maybe COMEX would open and bring it back up, but ultimately some sort of a mean reversion is on the cards here. If I scale out even more, zoom out to the weekly chart, we do have a weekly supply area. This is the first touch of that weekly supply. And whenever we have a first touch, that generally carries the highest possibility of the market basically reacting to that supply to the downside again. So precarious area for longs for sure, even though not impossible, especially if driven by some fundamentals. So I'm open to both sides of the story, but right now, since we seem to be struggling a little bit around GEX2, I decided to try and get involved in a short. I am in with 1 mini. You can see some orders there. I didn't use a bracket or the, I don't know whether they're proper OCOs yet, but I just decided to put a stop market buy. That's my stop loss. And then a nice limit buy further down closer to the value high. If I measure what sort of a risk profile this particular trade has, I'm just going to go back to a 30-minute chart over here. And I'm going to use sort of a modified fib retracement tool. So it's not a fib retracement at all. It's just something that I like to create in order to get a feel of how the trade is developing. You will see that the risk profile, so 0 is your stop, 1 is your entry, 2 is 1R, 3 is 2R. So therefore this trade carries a, let's call it an intrinsic profit margin of just over 2R multiples. So statistically viable target. So yeah, let's sit and watch to see how this is going to develop. Who is in chat? We've got Teo, obviously Bruno posting the risk disclosure. Even though I am Series 3 qualified, I'm not a CTA, so anything that you see here is for educational purposes only. Yeah, if you have a similar outlook, feel free to, you know, trade your own plan. We have Bryant in the chat, Jacob Aramis with a question. Will I be trading gold tonight? No, I don't really get involved in gold too much these days. I feel like it's a little too high up for my liking, and until there's some really good structure and also 30-minute candles that don't span like a million ticks, because, you know, right now we have over 100 ticks per every 30-minute candle that we get. That tends to be a little bit too spiky for me. So I have been focusing more on copper, platinum, and natural gas recently, actually. So I can have a look at gold, but I won't be doing any active trading, especially not for this time of the day. Why? Because we have kind of a dead zone where LME is not open yet. LME only opens at 11:40. At the moment where I am located, it's only 9:37 in the morning. So yeah, gold probably better for Asia and COMEX than it is for this particular part of the day. For some reason, on most days, it just tends to go into a bit of a consolidation. So it's almost like an out of hours period for gold. And yeah, Paul H says, so YouTube is ranking us now. Yeah, I don't know what that's all about. That's I saw that as well, and I was a little bit confused by that. I suppose it's kind of like on Facebook, you have these like badges, so maybe it's like a badge for a subscriber that posts a lot or is very active. I don't know. Yeah, it's certainly a new development. Yeah. Paul H says, good morning, I have internet at home now, but my home office won't be ready anytime soon, so I'm in a hot box room in a house or aircon office at work. I opt for work today. Yeah, my little aircon, portable aircon, is saving my butt these days. I say my arse, as we like to say over here. I do have a filter on my microphone, so the RNN noise suppression might be making me sound a little bit odd, but if I don't have that, then you're just going to hear like the aircon noise. And I have it set at like a pretty comfortable 20 degrees. And yeah, if I don't have that, I will be slowly melting under the lights and the monitors and everything that I have in here. And in fact, I've had some tech casualties because of this heat wave in the UK. I lost an old camera, so now I have a pretty big one, FX3, with this G Master lens. Then I had problems with Starlink, so one of the routers, I think, I'm not sure if it was Starlink, but something definitely overheated yesterday. So I had to run the entire stream with Jerome from my 4G phone, which is like terrible. Where I live right now, I'm pretty kind of out in the sticks. There's no real 5G masts anywhere near me. So if I didn't have Starlink, I probably wouldn't be able to have a very good connection. I would still make it work. But yeah, it was certainly a difficult thing. And then finally, one of my monitors yesterday, as I was doing my review of the day last night, just decided to randomly stop working. So I got a new monitor that arrived this morning, thank God. And yeah, I have 4 monitors now again. But yeah, it's been a challenge, man. Like, this heat wave is something else. I know that people are always like, oh yeah, what are you, like 90 degrees? Like, what? All of the Americans are like, well, we have like 120, like that's nothing. But there's something about UK being an island and something about being high up in the northern hemisphere. We're not supposed to have heat like this. And when it does hit us, it tends to have much more an effect. You know, it's kind of like Canada suddenly going through like a heat wave. That would be awful. And then to add insult to injury, we're an island, right? So we're surrounded by water. And then also, because it was traditionally pretty cold here, all the houses are made to retain heat, and not many people have AC. So all of that just means we are just like sweating away for about 3 weeks of the year. Usually it happens sometimes in June, but usually June tends to be cooler than this. So I don't know, the climate is definitely changing. I remember when my pups were small, they were kind of born in, what was it, November 2021. And then the next year, we had like 40 degrees heat. in Celsius. That's insane for here. Absolutely insane, because you know high humidity is always a problem. So yeah, we've been surviving. The main part of the house is south facing, so when the sun hits, it's like inside the house. It's like somebody putting in literally like a hair dryer in your face. Try and breathe through that, right? So obviously I'm all a bit, you know, careful that maybe my brain isn't working as well. And then today we have NFP Thursday, and yet it's a half day. So it's like, what are we doing there? Are they preparing something for us? Why put one of the biggest leading indicator releases on a day where it's just like we don't even have a full day? And every other time when we had a holiday day, we would technically move NFP to Mondays. So I don't really know what they're trying to achieve with this. Do they want to do something sneaky behind the scenes while only the interbank can trade with each other? You know, like Anna Marie said, where's my tinfoil hat? You know, do you trade silver? Reed W wants to know. Not on prop accounts, because I feel like they're not big enough to trade silver right out of the box. Even micro silver, when it's moving, that can hurt. So I kind of gravitate to present products that have micros and products that tend to move a little bit less crazily, because that is more suitable for the majority of the traders who are coming into combines and maybe just starting their XFAs with, like, you know, anywhere from 2 to 4.5K drawdown, which is not a lot of cash to begin with. So if you're going to trade something, you know, definitely choose something where you can go like micros and actually comfortably risk up to, you know, 100 to 200 bucks. Otherwise, you will be in a position where you have too high of a risk of ruin, and your survival in any funded accounts is pretty low percentage, because people are generally oversized. Whenever people start trading, they're like, oh, well, just gonna slap on a mini. It's like, hey, you just started this account, right? You spend money on it, not a lot, but you still spend money on it. And why do you want to ruin it like immediately by trading minis in there? And sure, we see some people getting lucky straight out of the box, but is that the best practice? I would argue no. And I would say that I would prefer to promote sustainable trading practices rather than full port. Let's get a Lambo yesterday. Yeah, Tom says the same thing. T3 metrics, silver is in beast mode, don't have a big enough balance to trade. Yeah, I mean, there is, you know, there's definitely money to be made if you have enough equity. But if you don't, just stick away from silver, you know. I really enjoy copper. I've got to say, copper, out of everything that I've traded, obviously crude oil used to be my favorite and my staple for 12 years, but you know, we can't keep trading crude oil when it's got one big day, you know, it moves 350 ticks like it used to do every single day back, like in the day, pre-election year. And now we get stuck in days that barely have a buck worth of range, and it's like, ew. All right, so 520 is kind of being a bit sketchy here. What I'm going to do, I'm going to close this position. I'm going to see if we can maybe go into a failed auction or something and maybe have a better position after we extend the initial balance. Because I did go into this with the view that we're going to keep GEX2, and I'm not seeing any initiation here. So it's best to, you know, just get a little bit of a loss and not kind of wait for your full stop and then wait for all the conditions to be there. Obviously, if we stay below the settlement, and by the way, settlement price for copper was around 520.40, thereabouts. Yeah, so we would like to maybe see extension of the initial balance, maybe even go above the Asia high. So let's mark the Asia high. Actually, was this Asia high or was this, no, this was actually yesterday's high. So what they might want to do is tag yesterday's high at 521.20 and maybe reverse from there. That's definitely an option. And in that case, we would have a pretty nice condition for a failed auction. However, in that case, I probably won't keep this all the way down to the London value high, but instead modify my target to perhaps take the Asia low at 516.60, and then that becomes sort of a neutral day hypo. So let's maybe write those down just to have them in front of our eyes. So here's the plan. Number one, failed auction short. So basically, failed auction means that we have to extend the initial balance first. As a rough area of interest, I'm going to say yesterday's high, stop run, and reverse. So that's hypo 1. Hypo 2, if I don't manage to get it, like let's say that we extend the initial balance, but then they just kind of throw up, I can jump off a cliff all in one massive candle, and therefore I can't limit risk properly. In that case, I might want to look for a neutral day fade. So instead of the Tokyo low being our target, that can become stop run and reverse from the Asia low as a neutral day fade. And then the third hypo, if I'm not seeing the extension of the initial balance. So obviously, if we extend the initial balance, some of these hypos may have to be either modified or invalidated, but there is a possibility that we go, let's say we hold the initial balance high, and then it rotates all the way through, so no extension. Well, in that case, we have a possibility for a sustained auction short somewhere here, and in that case, it's not going to be a neutral day, right? Because we didn't have the extension, and therefore it can be just a clean drop all the way down to the London value high. So condition, no IB extension upside as a condition. And then finally, if I don't catch any of that, and yet I still have time, and let's say we're sitting around the value high, I actually might want to have a look at the value high reversal long, okay? So here I have two shorts, two longs to account for both sides of the story. And if we do go higher and hold above the initial balance, there is a potential for sustained auction higher as well. But I personally, I don't want to be a buyer here, because I think that weekly supply at some point is going to come and smack us right on the face with shorts. So those are my hypos, and they will be here on the screen to remind us exactly what we're trying to achieve with today's plan, so that we're not doing stupid shit like getting involved away from levels. And obviously with the failed auction short, we have the GEX2 as an orientation level. So if we go higher, then reverse, I actually want to see it back below 520. So that's kind of like an orientation thing. That's how you create a plan, right? If you don't have anything like that, where your playbooks are super well defined and you are just kind of sitting there and going, oh, I think it's going to go short, that's not a good way to be. And I think that's where people also get into trouble. So yeah. And here we go. Adimesh says 1 mini, more like 5. Just because you can't trade 5 doesn't mean you should. Okay, doesn't mean you should. And this is where survival in the XFAs, for anyone who wants to trade 5 straight off the bat, even 3 minis, that's a ludicrous amount of risk. So think about it this way. If you had 2 grand, let's say you have a 50K account from Topstep, but let's not do Topstep and like $49, but instead let's try and put it in your own personal brokerage. So you have 2 grand. Now let's do some math. So you have 2 grand, right, to play with. That's your balance. And in order to get like a really comfortable position where you're not going to get whipped out and wicked out, for this purpose, I like to use the scalability of my average session ranges, and then I kind of divide that by a certain number. So how much of the average daily range do we have? We have about 148 ticks for the London session. I only calculated down to the start of COMEX. So when COMEX starts, there's different players, different, you know, objectives, different goals, different levels, apart from the options, but largely everything else moves. You'll have a different value area, different average session ranges as reversal points and all of that stuff. But to be comfortable, let's say we divide this by 5 or maybe even by 4, just to give it nice comfortable space. That becomes your stop loss size, right? So about 37 ticks. How much is 1 tick on copper? It's 12.50. So in order to risk just 1 mini, you would be risking about 23% of the $2,000 balance immediately. That's almost a quarter of the entire available balance. Would you do that in your brokerage account? You know, your hard-earned $2,000, you put it in, it's all like calling you, inviting you to play because it's finally been deposited, and then your first trade loses. So now you're like, wow, I'm down money, and I've just spent a quarter of my account on a single trade. And let's go even worse. So if we're thinking 3 lots, how much percentage is that of your entire balance? You're almost spending 70% of the entire day's balance. And let's go crazy. Let's say that you have $100,000 in your personal brokerage account, and on day 1 you spend 70,000 of that balance on 1 trade. Is that acceptable to you? Because that's what you're doing effectively. To me, that's utterly unacceptable. So I always aim to have the daily loss limit for the beginning stages of either the combine and especially XFAs by dividing the available maximum drawdown by 10, and that becomes your daily loss limit. Maybe you can, like, not per trade, but maybe you can push it to 250, right? Maybe. But that's your initial daily loss limit. You can open up the purse strings once you have a buffer in there, but starting out your XFA by full porting, you know, anything, and then losing it, because that's how it usually goes, that's not a sustainable practice. So for those of you who are blowing up XFAs all the time and you're starting with 3 minis, I'm not surprised. So I'm going to say it again, size down, slow down, right? I do have Pete the process parrot up there, but I can't be bothered to go and get it because it's too hot. But yeah, so think about bigger sizes. Would you actually do that on a bigger sized account? Probably not. Reed says, Crude has government intervention USA buying every day. Yeah, and yet nothing's happening, right? Every time crude goes up, it smacks back down because it just has a downward bias. Like equities have an upward bias, crude oil generally has a downward bias. And it's been like that for a very long time. Apart from 2014 when we had the crude oil crisis, and then it hit 114, I think it was. That's when I was trading it. All right, we have 3 minutes until we finish this 30-minute candle. Right now, the way I'm looking at this is that this is one big range. Why? Because we have this structure. So we have this candle from the second part of the initial balance. And we're not able to close above it or below it. So we're just kind of chopping in between that. So what I'm going to do, I'm going to mark this off as a range and then aim to get involved again at 520, because if you look at the range, that's where we are right now. VWAP is super flat. This is Globex VWAP. This purple line, super flat. So if we consider that this is now a range, you can do like a fib tool where you try and get a fib extension. I have a simpler way of doing this, but I'm not going to explain it now. I call it Q points, where it basically just divides the range in 4 equal parts, and then I look to get involved either at the top or the bottom quartile. So where would that be? So that's VWAP. Yeah, so yeah, roughly that would be about 520. So instead of me being short 1955, I'm going to try and obtain a slightly better entry on the nose at 520. And, you know, right now we're not extending the initial balance. So the range is what I'm going to try and use to obtain a pretty decent entry. And if it keeps falling, then we default to the next hypo. So no extension, that means hypo 3, sustained auction short. Therefore, the next playbook is not until down at 517 area. Bruno says, is this your new monitor with big Odyssey curved? I despise curved screens. So no, it's just a 27-inch Asus because I needed something fast and needed something that can fit on this desk, which is not the biggest. This is still my old desk. I should probably invest in a new one, but for now it'll do. Obviously new house, but we bought so much stuff that, you know, I had to slow down to spending a little bit. At least until we're a bit more settled. So, you know, I just spent on a camera, we had to get a new router, you know, got a couple of new monitors, got a new lens. It's, you know, it's a lot. And that's not including furniture that we bought as well. So yeah, we need to put a little bit of a break on spending. All right, let's have a sniff around at what other products are doing. Let's see what platinum and gold are up to. No, did I update this? Probably not. Let me just do a little bit of tidy up on my other charting platform. Okay, so that's being a little annoying. Just need to drag out some custom levels for one of the things I'm looking at. Yeah, it's still the same. So interestingly, platinum has been very quiet on the options front. Like they do have some levels, but they're like old. Like nobody seems to be trading it for, like at least not October for some reason. And I looked at it, like the volume is just nowhere to be seen. For some reason, they're not into platinum options right now. That can happen during the summer as well, obviously. Custom levels is what I'm after. Okay. Are these new? No, these still look very similar. Yeah, so platinum still has a core resistance and a former gamma wall up at 1400. And a few bunched up levels here, but they're old levels that may not be valid. Let's go back to Bruno. And chat. Where's my chat gone? There we go. Okay. Sandy is here. Good morning. Good morning. Alchemist, good morning. Right, gold. What's gold doing? So gold today has a gamma wall that's crept up, crept down from 3370, which was yesterday's level. Now it's down at 3360, so I wouldn't be surprised to see it at 360. Copper and gold are not correlating today at all. That's like a negative correlation. So they're not really connected today. Platinum is a little bit more connected, but not really all that much. Not really seeing anything else. What's DAX doing? DAX is kind of going away from its own gamma wall, which was at close to 24,000. And that may just fail the auction at some point, so that could be an interesting setup. We also have the value high coming up at 23,900. Again, it's a shame we don't have DAX yet, because that looks the best out of all of the things that I'm looking at. There's settlement, there's value high, and if we can kind of reject that and go back into failed auction, that would be a great setup. Okay. But yes, no DAX yet. Oh, hold on. I don't have this on all the chat. Right, interesting. All right, so some movement. Let's see how that looks on Bookmap. Right, we have some orders at 518. 518 in copper is actually a minor GEX level. So let's see how it behaves there. Another thing that I'm trying to do is whenever there is a GEX level, I try not to get involved too far away from it. So if I'm looking for shorts, for example, I would try to get as close to either 520 or, like, let's say GEX 5 is 518, to get as close to that level rather than being in a huge sort of drawdown moment because you're too far away from the nearest market maker level. So I definitely use them as orientation points, but hypos, I first use some of my other levels, and then I try and use the GEX levels just as a zoomed in area where I should be trying to get the best execution that I possibly can. So we'll see. Paul H, do you have any update from Topstep or DAX? No, I don't. I'm sorry to say. Now that we're only doing Topstep X rather than a million other platforms, I would imagine that some projects might be moving much quicker. And I know that Wake Up AI says, can you talk in English, please? Gex, gamma, and so on. Yeah, what? Like that, like I'm gonna sound Simlish to some people. You know, the old Sims game, the simulation of everyday life. No, so GEX is usually just a single price line where you would expect some sort of inventory adjustment to happen. And the lower the number of GEX, the stronger the level is. So more likely that the inventory adjustment would happen. Similarly, though, GEX levels can actually be traded through. So really the strongest levels are usually where calls or puts are located, and that's usually where gamma walls are. They tend to be pretty difficult to break, even if they are they're definitely broken. Sometimes you'll see the price then slowing down and then just kind of bleeding back through them. So yeah, but GEX 2 is decently strong level. The only reason why I wasn't sure about the position is because it kind of rejected it, then went all the way back up to it. So I was thinking, let's wait until the initial balance extension, because typically I like to see the initial balance extend first. Right now, this is all just still the same range. It's kind of like the opening range. except I'm using a full hour for the same purpose. So if you're still inside the opening range and you've kind of not really moved away from it, it tells you that there's not enough momentum. And this is why I'm like, okay, VWAP is flat. We're just kind of chopping inside the initial balance. So I have some hypos, but for now, that GEX 2 still seems to be pretty strong, and they did adjust inventory. So if we do creep up back there, that will be more inside the new range, because when we were there at the first instance, this all looked pretty bullish to me. But now, if we get up there, there is an actual range there. So I can actually use that to say, well, we've had, you know, lower high here, definitely have a bit of a structure, and it will give me more confidence to execute yet another trade, maybe even try and get it for slightly less of a stop loss as well. But yeah, we'll see. How do you correlate calls and puts on the chart? King Allen wants to know. It's a matter of situational awareness, right? So what is the trend? How far away from value are we? Did we extend the initial balance to one side or both or none? All of that will bring the context into consideration. That's probably a bit tougher for newer traders because, you know, some people want, like the amount of times that I've heard somebody come to, you know, to like they were emailing me and they're like, you know, I just want a simple trading system. That's kind of like telling people, hey, I want to be a surgeon, but I just want to do like simple surgeries, you know? It's like, so you're talking about a skill that's probably one of the toughest skills that you will ever obtain, battle, acquire in your life. And the reason why it's so tough is because there is a situational awareness. It seems simple. Just click a button, you make some cash or you lose some cash. But it's not that simple, is it? We have to have some really sophisticated psychological practices and deep awareness of how we are and what irks you, what makes you comfortable, what makes you uncomfortable, but it's still a valid trade setup. All of that comes with experience, experiential learning. And even then, when you know all of that, the market will still throw you a curveball. You know, it's still like giving you the middle finger, and you're like, really? Really? But the more you can explain what is happening in front of you, so be in that observation mode rather than being, oh my God, I'm missing, I'm following. The more you can stay calmer. And if you have a product that is moving so quickly that you can't even think, that's usually not a good thing. This is why when people go, Dee, come trade NQ. No, because I'm an older person. I look young, but I'm not. Like inside my head, I'm probably 120 years old. And I've always been like that. However, now that I'm going to be 45, I'm not exactly a spring chicken. Like I'm still young-ish, but for women, you could argue that I'm a middle-aged woman now. And that means my brain doesn't work as fast. It means that I need to keep my stress levels down. You know, I need to make sure that when the trade is happening, that it's happening on my terms and that there's no drama intra-trade, right? I can go into a copper trade and it just orderly does up or down. There's none of this like super quick up, down, up, down, 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 up, up, up. Middle, doji, red candle, green candle, red candle, green candle, red candle, green candle, doji, up, 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 up. It's like, it irks me, right? That's the thing that puts me on tilt, right? So I know myself. And this is why there are products that I resonate with and products that I don't resonate with. And then on the other extreme is products that do not move. So I know that Coach Jack, JD's dad, he trades corn, and Linda Rashke also advises people to trade corn. That's too far out for me, right? Because it doesn't move enough. I've tried corn, I've tried bonds even. And unless there's like monetary policies happening, bonds tend to be quiet and muted and trading in a very small sort of 48 tick range. For my liking, I need a product that A, has at least 150 to ideally 200 ticks per session for an average range. So like a middle ground of liquidity and volatility. And I need it to be relatively smooth while still having directional movement. If I don't have that, I'm like, God, this is like watching paint dry, or I'm getting stressed and I'm getting annoyed by the price action, and I just can't emotionally regulate properly. And if you can't emotionally regulate while you're trading something, that product is not for you. So by the same token, when I was younger, I traded NQ. I did. Granted, it wasn't as nuts as it is right now, but even during COVID, like, we still had more of a directional movement. And I think with the introduction of zero DTEs, we have more speculators that are keeping the prices more spiky, because the more speculators that you have, the more sort of range bound the candles will be, because you have more people kind of on both sides doing transactions. So it's not as smooth. And that's why I gravitate towards slightly thinner products that are not as speculative. So things like copper and platinum is a bit crazy, but it's very directional, right? Once you, like last night, I managed to catch aftermarket, so it was closed, and I looked at it and I was like, oh, this bastard is gonna like explode upside. I've seen this happen before. So I entered the platinum trade and I actually got 170 tick trade, like in the last 90 minutes of trading, or whenever that pop happened. So I was like, interesting. But I have seen this is something that gold and platinum do sometimes, usually ahead of some releases. It looks like the market is settled and nothing's happening, but then suddenly you get these like passive buyers that keep popping in and pushing prices to a new high, or the high of day is just sitting there and it's not really budging. It's just like there, like an eyesore. And then you go looking at Bookmap, and then suddenly you see a sweep upside. And you're like, who the hell is doing these like big orders that have a, you know, pretty sizable effect on the market movement? Like, what is going on there? And then you see a prompt new higher high. Then it gets a bit wicky, but then it carries on. And the amount of times that I've seen that, it's not something that happens every day. Like I said, it usually happens around the releases. But I have seen that happen in gold and platinum probably about at a rate of, let's say, about 10%, where you take a larger sample size into consideration. But if you take releases into consideration, like you have something happening the next day, I actually have seen that happen about 60% of the time. So it becomes a high probability trade for a certain type of a day, ahead of FOMC, ahead of ahead of NFP, any sort of big releases that are about to happen. I see it doing that a lot. Still no extension of initial balance, so we wait. Nothing. Look at it, just like going up, go down, going up, go down. Wake up AI. To be honest, after Trump came in, markets started a mess. I loved the volatility around the Trump drama. I think it. So you see, when the markets are directional and yet something is pushing them, I love those. Absolutely love those, because they generally give me bigger targets quicker, if that makes sense. So I'm not opposed to higher volatility, because my products go very directional. If you go back, now we probably can't go, like, it might allow me to go back maybe in time. Don't know how much history we have on these 30-minute charts, because whether they adjust it to the current contract or what. But let's go to maybe April or something. Just random. Let's see how that looked, because that's a nice little exercise Okay, so this is all still a result of Trump, right? Here we go. So just to look at the difference of the trending moves. And if I, would it allow me to go back that far in this contract? Let's see. So I've got data. It might not be a continuous contract, this, so I don't know how much this is going to be valid. Let's go to 29th of April. That might be the one. And apologies if you hear the noise. I do have the noise suppression on, so hopefully it won't do much, but I have the gardener in. All right, so if I go back in time, I have to use my charts for this. And again, it's the current contract scaled back, but you know, you can probably see it more smooth on a continuous contract because it smushes all of them in. But similar setups, and COMEX was moving a lot more, primarily because Trump was talking, right? So he was awake and talking. So you would get the initial balance. This is actually now one of the setups that I have today. And then you would get sustained auction down, and then it would just go massively, right? There would be a little bit of a squiggle here, but my entries usually are in and around the initial balance low. If we bleed through the initial balance low all the way down, I don't take that because I think it's too much risk. So if we're somewhere near the initial balance, and in this case, we also had the value acceptance trade whilst that was happening. So value acceptance, initial balance extension down, 30 minutes closed, and then it just goes. And it was happening like all the way along. This is the backtest mode that we created on one of our indicators because I wanted to have, it doesn't erase candles, but it shows you all of the other levels that were there at that point. And then let's have a look at London here. London opens with a low, extends the initial balance, and just massively goes, hits the extended ADR high, so you can see it here, and then reverses, and then does all of that reversion during Tokyo. So those are still the kind of setups that I look for, but now we have smaller ranges, so you can't shoot for like, those moves were like between 300 to 500 ticks. It was insane. I actually saw it go like over 1,000 one day. It was a Trump release, so again, pinch of salt and all that. Because obviously you're not going to get those kind of movements without some sort of an external catalyst, usually. April was my best month with those wild moves in tariffs. Yeah, I mean, if you know how to read the market, and I think, Tom, you're pretty skilled. And yeah, I would say volatility is our friend, right? But if you don't know how to adjust your stops, if you don't know how to modify targets, you will still be like stuck in, oh yeah, I only use 10 points on NQ and now 10 points doesn't last for a nanosecond. It's like, well, yeah, you need to size down and expand the stops, right? So that makes sense. But hey, what do I know? I've only been doing this for nearly 2 decades. Bond Benz, am I single? No, I've actually just celebrated 20-year anniversary from the moment we met and started dating with my now husband. And in August, we're going to be celebrating 10 years of marriage. So very much not single and happily married with 8 dogs, very settled. So thank you, but no. And also I'm old, so yeah. I've done well for it. Like, actually, it was quite a funny moment. I went to we went to celebrate our best man's birthday. He was 50 this year, and I met a guy who's a dentist, but he also does like medical aesthetics, like you know, Botoxes and stuff. And then he was talking to me, and he goes, "Oh yeah," I said something about, you know, not having enough time left, and you know whatever, you know, just being at in the middle of my life. And he goes, what? Come on, like, what are you, like 25? And I was like, no, 45. And then he looks down at my chest, and I was like, is he like staring at my boobs? This is a bit weird. And he goes, no. I just wanted to say, yeah, I'm looking, like, because I'm in medical aesthetics as well. I was looking for wrinkles, because 45-year-old women usually have like wrinkles everywhere. And here's the tip: I use sunscreen every day. I think that's the one thing that has saved my skin. I'm Mediterranean. I have olive skin with kind of like a yellowish tint to it. And even my sister has the same thing. But I still use sunscreen, right? Because UV rays can still age your skin. So yeah, I don't, you know, I can tan, but that's not the best thing. And I think your skin is the biggest organ in our body, and it can be a very good indicator of your overall health. So if we're not, you know, if we're not taking care of our skin, then we're probably not taking care of our bodies and brains as well. Because your brains need to be at ultimate peak condition in order to do this sort of stuff, because this is very cerebral. You're not like lifting weights and stuff, but you're working your brain. And actually, Jerome mentioned it yesterday, that people don't see the growth of the brain because it's not so obvious. Like when you go to the gym, you can see the progress. But how do you see progress in the brain? Unless you take scans and stuff. You're not going to know that your brain has suddenly grown new neural networks and created new autopilot habits. But yeah, we have to take care of ourselves. You know, I'm a huge proponent of self-care, sleeping enough, sunscreen, you know, limiting dangerous substances. Now, I'm not a nun, okay? I'm not a nun, so I do drink, and I enjoy, you know, a drink or two every so often, or three. Just not very often. You know, I'm not going to get wasted every weekend and go out like clubbing and stuff, because I think that's a waste of time. That used to be my job. I was a musician for 20 years before I even went into trading. And I started playing music professionally in 1994 when I was very young. And I did that all the way through. Actually, for my first year as a prop trader, I tried to run both, and it just didn't work. So in the end, I quit the music industry and just went into trading, because it was more rewarding, less backstabbing, less ego, bizarrely. You would think that traders would have more ego, but I think musicians have more ego, and yet they have largely not enough to back anything with that. Just like good given talent for you know, for playing, but you're like, yeah, but you're like in debt up to your eyeballs. You don't own your house, and you have a car that's like 1,000,000 years old. It's like winning. And yet they are the biggest egotistical people generally. I'm not saying there aren't nice people, but usually the ones who are not that successful, they're the ones who have a lot more ego. And I think one can kind of argue trading is similar, I suppose. Like the more insecurities a trader has, the more desire they will have to show off physical stuff. And, you know, if you don't have love, if you don't have friends, if you don't have people around you who love you and tolerate you and are there to help when you need it, you don't have anything. Like, you can have all of money in the world, and yet you'll be alone. So unfortunately, I know someone in my life who ended up like that, and it's kind of sad. Anyways, I feel like we've gone into a bit of a weird topic there. So let's go back to trading. Initial balance still not broken. We tagged it. Now we're turning around. So yeah, range bound market through and through. So let's see what happens on the next run upside. Do I have any new supplies. We had a supply up here, but I still think this is now just chopping inside the initial balance range. So instead of this being a range, now we have this as a range. And until that breaks, we play the range. But because I want to be short at these levels, I'm not like Dolby where I would take both sides of the range. I will be only taking the side that I think has a higher probability of working out. So really, I would want to, again, see it at 520. I see nothing else here. If we hold below the initial balance, I have a potential for a hypothesis. Do you trade full-time? Well, what do you think I'm doing here? But do I trade full-time? Like, do I sit here for like 8 hours, 12 hours? No, I am a full-time trader. All of my businesses are related to trading. We used to have an IT recruitment company, but that kind of didn't do so well during COVID, so we ended up closing it. So now, literally, all of my businesses are software development for trading, mechanical algorithms for trading, prop trading, live funded trader, Topstep, on-air personality trading, Topstep. So all of my jobs are like all about trading. Like, I'm not super happy about that because it's like, you know, it's one of those things where I like to have multiple sources of income that are not connected to each other. But it just so happened that I suppose they're a little bit different because one side is just software, even though it is still trading related, but it is software. And then the rest of it, you know, I don't know, maybe I should revive my my Bob merchandise, because I do have some mugs and like shirts and stuff that swag basically for market stalkers. Maybe I should revive that. Let's go, hey, buy a tumbler, it will keep you cool, because it's like insulated and shit. But I'm terrible at that sort of stuff. Like, people say to me, oh yeah, you run, you know, you have a course, you have courses as well. Again, we haven't marketed that in like half an age. And they're like, oh, you're a saleswoman. And I'm like, what am I selling? Like, just like, I know that I'm trying to sell copper, but I'm not a saleswoman. Christ. I've seen salespeople who are excellent at what they do, and I know that I just suck at it, so I don't even try, you know. I even hate the audience interaction part, guys. You know how Andre is like, click like, click subscribe, TopstepTV, let's go, and all that. I can't do that. Every time I do that, I just feel so fake. I just feel like I'm please like and subscribe. So that, and I know everybody's supposed to do that for audience engagement. It's just every time I'm writing a long form video, I have to like write it in the script. Otherwise, I will totally forget to do it. It's certainly a problem for somebody who's on YouTube. So I usually have somebody like Bruno or Sandy, and yeah, it just they do the audience interaction for me. So, yeah. What was the name of my band? Well, I was a session musician, so there were many bands, and one of them you might know, it was Rod Stewart Band, because I was actually a Rod Stewart saxophonist for about 2-3 months. I did a number of appearances as a session musician, sort of in the shadows for X Factor. We did an appearance for ITV show for Andrew Lloyd Webber's Search for Jesus. It was kind of like a reality TV show, but music. And then they were looking for the new Jesus Christ Superstar for their new Broadway show that they were going to go off for 3 months on. They actually offered me to go, but at that time I was already in trading, and I was like, oh God, I would have to be away from home for 3 months. And you know, when you've been touring for 20 years, you just get sick and tired of travel. I'm very much a homebody now. I don't like going anywhere. I'm just like, you know, I barely go out grocery shopping, like dog walk and grocery shopping. That's basically what I do. Yeah, Andre has an amazing, and Andre and I are the same age, right? So technically I should have the same energy, but no, he's just like so hyped up, and Yeah, when you actually talk to him behind the screen, he's extremely intelligent, and I think he definitely puts on a little bit of a, I'm just gonna be a little bit of like goofy Andre. Oh my God, NQ 10 points. Oh, 10, yes, generational sell-off. Yeah. But yeah, when you're talking to him behind the screens, he's like very much like business and, like super serious. And that actually surprised me the first time that I saw him away from fast markets, because we've been like working together from pretty much the start of TopstepTV, because I joined them in August in 2023. Was it 23? Yeah, it was. Jesus. It's I can't believe how much time has gone by. Yeah, so me, working with Andre on fast markets, and him being like all like jokey, and quite frequently the target of Jack's jokes as well. And he just took it all like a champ. He was like, yeah, we're making fun of Andre. Yeah, that's fine. And then literally a few months after that, we had a chat. And I was like, wow, you're a bit different. What's going on here? And he's like, yeah, blah, 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 business, or like, blah, 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 this is what needs to be done, and blah, blah, blah. And I was like, okay, it's a different side of it. What's happening to platinum? Platinum is just doing platinum things. It's a liquid market. Let's have a look at it while we wait for this thing to happen. All right, so where is the value area? That's the first thing. Yeah, so platinum has got into value acceptance trade right now. 14.075 was the London value high. I have COMEX from yesterday because that's what I was referencing. Yeah, this is now value acceptance. 4.75. And we're about to reach average session range low. Also, guys, we have NFP, right? So some meltdown in some products is going to be very normal. Right, we're about to break the initial bounce low here. So I'm going to front run this. Let's see if we can get a little bit of a move down. Although if everything else is melting, let me see correlation. Not me, sir. Okay, so correlation between the metals is actually kicking up. So if that goes even higher, then we may actually get a value acceptance later. Copper doing the same thing as the correlation grows, so it might want to catch up. But we just popped the initial bounce by a little bit, and there's always a little bit of a up and down, up and down. Let me maybe use... I'm actually going to risk about 550 here because I want to give it enough time. 537, okay. Because I want to give it enough room to do whatever it's going to do. And to maybe catch up on some of these movements that platinum and gold are doing, but copper is kind of late to the party, and that can pick up later on and just kind of start smashing it down. So we'll see. But sustained auction now, since we've extended to the low side, that's definitely in session. Platinum value low is 13.75.8. There you go. So we're about to complete the value acceptance on platinum. This is also where the average daily range low is located. So technically could have a chance to go into a single direction day if it just bleeds through the COMEX val. Sorry, not COMEX val. This is London val. London val. And we'll see if copper can catch up on this crazy correlation. Hypo 3 in progress, sustained auction short. We didn't have the initial balance upside, that's fine. And now we're looking for the follow through, basically. That's all we're looking for. Gold just went through its own gamma wall. That tends to be the big one. So if you just want to see where gold levels are, so I don't have to drag out everything, this is the platform that I usually use for options levels, because I don't like everything bunched up in the same thing, so I have multiple things. So yeah, once it bleeds through gamma wall, if we don't get like a big wick back up, then the sustained auction on copper should also pick up speed, because they were negatively correlated, but now they're kind of going into a more positive correlation, because copper is just crossing over the zero correlation, and that means now we're going into positive territory. And platinum, yeah, platinum's been pretty crazy. I like to trade it after hours because I don't know how to limit risk, and you don't have micros on platinum. It's just a mini, which is $5 a pop. It's kind of like the full NQ. And when something has an average range of 600 ticks per day, yeah, limiting risk there to like 35 ticks is almost impossible during active trading hours, at least for the way I trade, so keep that in mind. Now I do think I'm a little bit wrong on the gamma wall there. On this is the yesterday thing. Yeah, so we have HVL and put support down at 504, but nothing else. All right, we're moving finally. So the next area that it might battle through is between 515 and 516, because that's where the next GEX levels are, and we'll see whether the market makers want to use those as an accelerator, because this would all be just an inventory adjustment at this point. All right, there they are. So 516 is tagged. Let's see what they want to do with it. Some anomalous volume there, but let's see if there's more juice. And then if they bleed through 515, we have a pretty decent amount of space to go for the full value acceptance, just like this one did, platinum. So yeah, let's see. Actually, let me put the markers on so that we know what we're staring at. So 516. And again, there can be a little bit of a bouncy bounce in this area, but as long as they are sustaining below it and below the initial balance, this is still a valid trade. So again, no freaking out. Okay, just breathe. Commit to the trade. GEX4. And then we have GEX3. And at this point, when you have a mean reversion potential in progress, all of these GEX levels can act as accelerators rather than stopping points, but they can also be stopping points. So the danger zone is going to be 515, because that's where London value high is. Gonna take a ride in there's a highway to the danger zone. I like to sing that anytime we're like hitting a dangerous zone where we might get a bounce. I didn't mean to say 515. I meant to say GEX3. All right. Now I want to stick away from low time frames because I'm looking for a swing down, and sticking on low time frames is going to make you get out of a trade. Some imbalance to the downside on the dome. So there's 21 contracts lower down. Port City Investments. Deeyana, what are your thoughts of trading live cattle? So I traded live cattle a couple of times with the help of Coach Hoop. I don't know enough about it to trade it just by myself, right? So if I'm going to trade cattle, I will always have Hoop, and we will get on Discord on like audio, and then we'll be like discussing levels. I talk to him about copper, he talks to me about live cattle, and then we're kind of discussing fundamentals around it, technicals. And then I will always run a trade by him before I'm like, hey, do you think that, you know, maybe a short here would be good? And he's like, actually, no, we have some fundamental stuff that's actually pretty bullish and not a good idea to short today. But maybe if it comes up to this level, and maybe we'll have some change. So yeah, on my own, I think cattle is a great product, but I just don't have enough knowledge to trade it. As always, you need to go to the source, to people who have been trading that product for a long time and they know a lot about it, rather than trying to do it all by yourself. So yeah, Port City Investments is a good question. I think more people should trade cattle. It when it moves, it's like so directional, man, like relentless. Following on from the Chicago meetup, any chance we could have a London one? I don't know. I really don't know. Maybe, perhaps. I know that there's like some ideas kicking about to have, to maybe have like offices around the world in like parts where some of us are located. So that could be on the cards. A meetup in London would be awesome, but is there enough top steppers? Like I would probably like to get like a meetup where they kind of travel over here as well, and then we all kind of come out for meetups. So MP and Dakota and Jay, you know, Hogue, whoever can come over. But I know that it's a long trip though, and it's the same problem for me going over there, right? It's a really, really long trip, and typically they're only there for like a few days, so I would have to do like a 9-hour trip with jet lag, and then 3 days there and then back. I think that would quite possibly kill me. Because, you know, if you're gonna go halfway across the world, you want to have at least like, I don't know, 5 to 7 days there, maybe 2 weeks, but yeah. Let's have a look. Those of us who are also subdued appreciate your lack of YouTube entertainer type energy. Yeah, so I tried doing that in a couple of my videos. Like, look, I will crack jokes. I will, you know, I will talk to you, but I'm never going to be like one of those, hey guys, let's do this, that. It's like, that's for like kids, right? That's for people who are maybe 25, you know. Be bubbly and energetic when you're young, you know. I can't be bothered. So yeah, having said that, you have some YouTubers that are completely on the opposite side, not to name any names, but you know, most of the trading is just like, and it's like you log in, you're like, not log in, but you know, you join the live stream and you're like, are they talking ever? It just looks like they're frozen. But, you know, lots of quizzical sort of, you know, expressions, but not much else happening. So it's just, you know, different, I suppose, different styles. I actually get accused of talking too much by some trolls. And then I always say to them, might surprise you that my job actually involves talking. And then I also asked them, would you like me to just sit here in suspense with quizzical expressions? But I suppose it's also because I stick in trades for a long time, right? So I enter a trade, I'm not like grasshoppering in and out, in and out. I'm just, you know, identify a trade, I get in, I hold it. I suppose that's not not interesting enough for them. But you know, I'm here to make money, not to appease trolls of them wanting me to do more trades. It's like, I couldn't care less what you want, man. How has Crude been treating you? You know what? I've been very careful with when I trade Crude. I've been approximately trading it once every 2 weeks. So I managed to find a decent setup, and it does work. Like, I have made a bit of money on it. Would I suddenly go back to trading Crude all the time? Hell no. I think it's still weird. It still does, like, oh, jump off a cliff or a massive run to the upside. And then the next day, and the next day, and the next day, 95 tick movement. And I'm like, you tricked me again. But the trades that I have done, they have been profitable. So, you know, whether it's the selectivity of them, whether it's me not expecting too much out of it, and just going, you know what, I'm going to take 35 ticks out of it and be done with it, which is outside of my actual trading system, because, you know, I'm somebody who likes to grab 70 to 100 ticks on average. Sometimes even more if we have the potential. Like right now, we're coming off this swing, and technically the, you know, the low of this whole structure is down here. But we first need to crack 516 and 515, and then maybe if this carries on down, go into a value acceptance, if this is going to turn into a proper swing rather than just a scalp, and then rotate through value. And at that point, that would be my trade done. But yeah, I'm not counting on that yet. This is still far from, you know, from safe. The next thing that I'm looking at is that we actually stay below the initial balance. Excuse me. That we actually stay below the initial balance and close a 30-minute chart without too much of a wick. And then for the next 30 minutes to actually leave the single prints behind outside of IB. Then we might be safe. Then we can, like, say, right, holding this for the next 2 hours. Let's see what COMEX brings, sort of thing. But yeah. I'm just gonna clear my throat for a second because I've got frogs in my throat. All right. Also had a bit of a vape there. Yes, T3. Tom, you got me again. Yeah, just for a bit of focus, you know, a bit of focus. What are my targets to the downside? Well, I've just been talking through them, right? So 515 would be pretty good, but because of how platinum and let's see what gold is doing actually, because I haven't been keeping an eye on it. Depending on how gold and platinum are also behaving and whether copper starts correlating more, because the correlation keeps growing. And the way I'm seeing this copper move is that it's sort of running late to the party of whatever gold and platinum are doing. And it is a precious metal, and yet they're moving in the same direction. So if we do get the correlation that's creeping up, right now it's come up from slight minus to 45% in positive. If that happens, copper is going to try to catch up on whatever the other two have already done. In that case, I can extend the target down to the rotation into the London value, and then rotating all the way through value as the value acceptance special situation play. So then I can extend the target. But right now, 515 until we know more. Again, first point of orientation is, are we going to stay below the initial balance? So no targets are to be spoken of until we have the next 8 minutes holding below the initial balance. That's step one. This is called the OODA loops, or OODA loops. That stands for observe, orient, decide, and act. Observe, right? Most people, when they're in a trade, they don't observe, they just react. They're just like, should I exit? 11 ticks, cover the loss, It's like, no. It's in profit. It's below initial balance. Let's breathe, observe, regulate. We talk about this during Neuro Wednesdays. And then we'll see. D, thoughts on footprint charts. I don't see many Topstep posts referencing order flow. Well, look, dome, volume, and auction theory, that's all order flow, right? So when you hear people talking about TPOs, dome, size on the chart, volume dropping off, that's literally the same type of information that is displayed in footprint charts, only to a more maybe visual level. Now, remember, the most top steppers are old school, right? They come from the pits, or they come from the olden days of prop like myself. And I know that footprint charts was something that Market Delta came up with in 2014. And I remember looking at it and just going, this is way too granular. And I found footprint charts to be only good for scalps. So you can scalp a pretty good sort of 7 to 10 ticks out of it. But if you're trying to hold a swing, it's going to knock you out of your trade like every 5 seconds, literally. So this is why I personally don't gravitate towards them. Instead, I gravitated towards the TPOs that allow me to look at the, the 30-minute auction process. How are we proceeding? And then you can go granular with it. You can like have bookmap on the other side, like I can show you just briefly, connected to a random account, just for like data and stuff. But yeah, I have bookmap that allows me to see, where the, it's effectively a visualization of volume and dome in the same vein. And I always have that on one of my screens, or almost always, unless I'm having connection problems with internet. And yeah, so to me, footprint just goes too granular, right? It goes into these micro movements where you can catch a little bit of momentum, but it doesn't allow you to chill out because it gives you like way too many fake out signals that are scalps. However, when you're in a swing, like for example, right now, 516 is being reactive, but I have a bigger orientation point. I have the reversal from a swing high. I have the initial balance to guide my decisions, and I have VWAP. All of those are bigger time frames, right? So why would I be losing my eyes looking at footprint charts and grabbing like 5 ticks on the way down, and then another 5 ticks, 7 ticks, and 5 ticks? To me, that's like so much more work and so many more commission fees for the execution, rather than me catching a very nice bigger swing and then holding it, like squeezing out every last tick that it's going to give me. That's how I like to trade. Now, if there's no such thing, if we're very range bound, if there's no NFP coming later, I would probably be looking at grabbing, 30 ticks here, 20 ticks over there. But I don't like those kind of days. To me, that's like a range day. It's like, oh, here we go. Now I'm going to have to do 10 range trades to, get $1,000 out of it. And then you have to look at the charts, you have to like watch them, and you have to be setting alerts everywhere. You're like, God, this is so labor intensive. But yeah, it's a matter of me just maybe being, I call myself a lazy trader, less executions, more ticks, less drama. If I have a swing, I'm not going to scalp it. Because why would you? It's a swing. If the price action is giving you a potential for a swing, I don't see why you would lose your eyes grabbing 5 ticks here and there. But hey, that's me. I'm not saying that's right or wrong, right? Everybody has their own style. So if you are more of a scalper type, then I think footprint is amazing, right? But ultimately it's all the same information that you can see. And footprint has time and sales. I think it's got like some real-time actual executed orders inside it. So yeah, it's a style difference, I think, mainly. Wake Up AI says, so is it gold goes first, then platinum, and then HG? You know what? Sometimes gold will be doing nothing, and copper is just either screaming to the upside or dropping out of bed. So sometimes they're not correlated, but on days when we have a potential for unwinding movement, like ahead of NFP, then they will correlate to a degree. But from what I've seen, copper is never like, 90% or, factor of 1 correlation with gold. It's almost never like that. You have more chance of platinum correlating with gold by a factor of 0.9. So I see that quite a lot where they kind of start correlating, but then at some point they start diverging as well. So, it's very random. You can track like this, there is a correlation coefficient that you can kind of connect to the chart, and you can track that. I have it on one of my charts just for this purpose, to make sure that if all the metals start correlating, I want to see the degree of correlation that they have. Again, might be a little bit over the top if you're not somebody who's been, who clocked up hours of chart time like I have. Because to me, adding just another thing that looks at the triangulation between, 3 semi-correlated products is not too much of a jump to kind of just add another block of memory in there to check correlations. But for somebody who's just learning and you're like, oh my God, I have to learn GEX levels, then I have to learn, profile and initial balance and the auction theory and all these playbooks and the quantitative, it's Jesus Christ. And now I have to look at a correlation as well. Mind explodes. So you need to take it step by step, right? Add one thing, get very comfortable with it, spend like 3 to 6 months, then add another thing, see whether it works for you, whether you connect with it, then maybe, once that's autopilot, maybe you can add more. But yeah, just don't overload your brain. Mariano says, what's one book would you recommend to read? One of yours. Well, my books are more technical. If you're looking for more like kind of psychological stuff, I would probably, here's the thing, I would probably read something like The Miracle Equation by Hal Elrod, which has nothing to do with trading, okay? It's like how to approach goals in life and how to realize that setting a goal for the first time is not to do with the goal itself, but instead with the identity shift that you will undertake whilst you're trying to reach the goal. Does that make sense? So the real goal, like let's say I want to get $10,000 payout from my XFA. But then you go, well, what steps do I actually need to take in order to maintain the account, not lose it in a day? Well, I need to have a daily loss limit. And you sort of break it down to actionable steps. Now, the guy talks about sales and how he was setting sales for himself. And it is not The Miracle Morning. It's the second book, The Miracle Equation, and how the power of belief makes you change your habits into something better and nicer. And then ultimately you go through an identity shift that enables you to develop the skills that will sometime in the future enable you to get, like, let's say a $10,000 payout from your XFAs. But on the first try, you probably won't make it, but you give it like your unwavering faith and maximum effort to try and get there. That's the thing that had a lot of difference for me across the board in life. And if you're just looking for trading related books, yeah, my books, all 3 of them are very technical. The first one is Price Action Trading with Supply and Demand. That tackles the swing extremes. So if you're struggling with analyzing higher time frames, you never know what you're looking at and how relevant they are. Like, for example, I said the weekly on the copper has a weekly supply. We're getting to the first touch, and I want to be a seller around here. That's why I'm not looking for longs anywhere here. The only time I will look for longs today is maybe if we're like at the end of the day, we're kind of at settlement and it starts to turn around. Otherwise, I'm perfectly happy doing shorts here. And I know I said 2 longs. That's just in case that they do start to appear. Then I will have to change my hypos. But for now, I would prefer to be in a short swing at these levels. Why? Because we have a weekly swing. So my first book talks about that. My second book is my version of Profile, and it's entitled Day Trading for Income. Because I don't just go regurgitating all the stuff that Dalton talks about. I do introduce the concepts, I clarify some concepts down to a simpler terminology, and then I add my own stuff like time of day, session ranges. Don't know whether I put post and my cut in there as well, but I literally connect it to my own methodology. And you effectively get a textual version of what is effectively a level 2 in the pro development course, Market Stalkers, and you get it off Amazon for, you know, very low costs. And then the third book was just a workshop on candlestick patterns. To me, I classify candlestick patterns between weak and strong, and I've never seen anybody else do it. And yet in my coding experience, there was a massive difference when I said to the algorithm, I wrote a piece of code, said bearish engulfing so that the next candle closes lower than the close of the previous candle for bearish engulfing. And that had okay results. But then I visually noticed that there are certain patterns that are stronger, and they actually had the following condition where the bearish engulfing actually closed below the low of the previous candle, not the close. So I modified that, and suddenly I got these bigger swings. So I was like, okay, that's a stronger reversal. I need to tell others. So then I write books. So I wrote that, and that's basically just a study of my observations and probabilities of the patterns. It's you know, a short read. All of them are just self-published. You know, they're nothing like, you know, not like with a publishing company or anything. It's literally just something that I thought people would find valuable, so I decided to put it out there in written form. And it's basically the most affordable way that you can start with what I'm doing here. Options are only in the pro dev course, so I only explain how to use these levels in level 3 of the video course. So it's all out there, you know, for serious traders. It is a CPD certified program, so it's not like some, we have to, like, as a part of the CPD certification, we have to like keep reviewing the program every 12 months, and then if we have to tweak it, we actually have to add to it. So that means D has to get in front of a camera and gap into it to, you know, either break down stuff or to improve it with the new questions that arose while other students were going through the course. So yeah, it's a bit of work, but you know, I think we have something special there. Pretty structured. It's kind of like a university degree, mini university degree, rather than just unstructured webinars where people just yap at you for 4 hours. But yeah, so those are the books. Those are my books, and those are some of the books that I found helpful. All right, we're coming up on time here, and Daniel says, a pleasure to be on your live as always, learning every time I'm on here. Go to bounce, catch you next stream. Awesome. Thank you for being here, Daniel. Yeah, the best books have nothing to do with trading. I know, right? It's all about mindset. All about mindset. Okay. BC says, you don't need books. Everything you need is already out there on the internet. Don't complicate trading. Okay, then. Thank you for your honest opinion. So why do we have universities then? If everything is on the internet? Like, who the F needs a degree, right? See, I don't really get that. That's probably a younger person saying that. It's like, everything is on the internet. You don't need to go to the library. I have a different view. I think that books carry the knowledge of the humankind, and I think they're very, very useful. But hey, I'm Granny D, so yeah. Kennedy says, what's the name of that book again? Miracle Equation by Hal Elrod. Is that the one you're talking about? Let me put it in. Hold on. Miracle Equation. Port City investment. Does XFA balance move to live if I took max payouts in XFA? So it's max payouts is per payout though, isn't it? Or did they cap that to 150K as well? I need to familiarize myself with this because I'm obviously in the live account, so I have no, I have no idea what XFAs are doing. I know that when you transfer the balance to live, the maximum that you can transfer is the highest size of your biggest XFA, as in like the combine that you actually started with. So if you had 550 XFAs, then the maximum amount will be 150,000 in the live. But for payouts, I'm pretty sure that's like $5 grand per payout per XFA. Do they cap payouts? I wasn't aware of that. I don't think they cap. They cap pay per payout, but maybe not overall. Could be wrong. I could be wrong. But yeah. Bruno, correct me if I am wrong. Yeah, but that's not like just one payout, right? You don't just get 5K. It's not just like, oh, get 20K and then that's the maximum you can take out. Because I'm sure I've seen people taking out much more. I mean, I took more than that, didn't I? Maybe that was before a rule change. So yeah. Yeah, so 5K per payout per XFA. I wasn't aware that we have any sort of a general cap. There's a cap for the transfer, obviously, but whilst you're in the XFAs, I'm not entirely sure. Let's see what Bruno says, because he's going to know more about that than me. I'm just waiting for Bruno. He's typing. I'm 28, the most successful. Yeah, so I thought you were young, right? 28. I'm 45 almost. There you go. Most successful people have no uni degree. I don't know which successful people you know, but the ones that I know, one of them I used to work with my husband, Jason Hubbard. He has a degree, and he worked for Apple, and he's one of the top people at Apple. But I don't know, maybe there are certain industries where you don't need a degree, but in the tech world, a lot of people who are successful would have gone through a university. And of course, you had the odd ones out. They were college dropouts and still did well. But that's not the norm. You know, we're talking like lottery winners versus normal people. You know, people who are the odd ones out. That's not the norm. So don't go telling people, oh, you don't need a university degree because the most successful people. It's like, you're not one of the most successful people. Maybe you will be, but at the moment, if you're, if you get to a certain age and you're still not Elon Musk, perhaps don't neglect your education. That's all I'm going to say. I totally disagree with what you're saying there. And I'm going to say that education is very important. This whole business of, yeah, he's a multimillionaire, he doesn't need a degree. If you have that sort of approach in life, the likelihood is that you probably won't get anywhere. But hey, that's my opinion. But hey, if you're 21 and you come up with something like, Venmo or PayPal, and you sold that and you ended up a billionaire because of that, good on you. But if you get to, 35, 40, 45, and you haven't done that, you better have a degree. Because you're going to be doing some shitty jobs, man. Otherwise. All right, so Bruno has finished typing. So he said 25K per payout, but yeah, you can have 5 payouts on 1 XFA, and that will trigger a review of the account by the risk team to be live funded. My one was actually at 3 payouts, but hey, there is a consistency thing they look at as well. So technically, you can only request 25K per XFA, and the remaining profit will be transferred to the live account. Yeah. So that's kind of the core way of doing things. But like I said, there is a consistency that they look at. And if you're wildly inconsistent, there might be a chance that you're not going to get the transfer after the 5th payout and they want to see more out of you. That's definitely a possibility. All right, let's finishing it up. I'm going to babysit this because we are getting to a point where LME is going to start trading in about 30 minutes or so. And we're probably not going to get too much more movement until that happens. So I'm going to babysit this. I'm going to decide what to do with it, whether to keep it. But for now, we're still inside, still below the initial balance, which is a good thing. And let's see whether we can get a bit of traction into the LME open. That's all for me today. I will not be on lunchbox trading because it is a half day today. Be careful of NFP. Please don't be long or short into NFP. There will be opportunities. Like, just wait for 4 minutes. Okay, wait for NFP to come out. Wait 4 minutes and then trade. It's not a rule at Topstep. It used to be. But slippage is going to get insane around the NFP. Whatever you're trading is going to have some sort of an effect there. So don't be silly. Be flat into the NFP and then look for the opportunities right after. That's all I've got for you. This has been Eurotrade on TopstepTV. I'm Marcus Stalker D, and I will see you again next week. Enjoy your weekend and happy 4th of July to our American friends. Take care.